Ready. So after 43 days, the US government finally reopened. The shutdown that lasted 43 days ended on the 12th of November, and traders were left without data for that whole period. Last Thursday, the 20th of November, we saw the release of the September NFP figures. We were also told there'd be no release for October. Now, those figures caused a mixed reaction. If we look at the charts here, we can see that initially the market rallied to the upside, and this was simply because of positive NFP data. But it was released at the same time as the unemployment rate, and the negative unemployment rate caused a lot of uncertainty in the market. The market pushed into this key area of supply here, and as we drove into that area, you can also look at the US 100 or the Nasdaq. It did exactly the same thing. It came to a very clear area on the 1 hour time frame of supply. Now, as the market pushed into that zone, along with the US 500, the S&P 500, the market became indecisive. And what followed was over a 3% sell-off due to that uncertainty. Traders are trying to understand whether the Fed are likely to cut rates in December or leave them unchanged. The uncertainty in that data suggested perhaps they may leave them unchanged. This meant we entered a risk-off scenario, so the market dropped heavily to the downside. This 3% sell-off was a huge move on the day, and we actually made a new low. Now, if you look on the daily time frame, the market had already semi-confirmed a downtrend by breaking this key bit of structure here. As we broke that structure, we came back into supply and we sold off, making a new low. But what followed on the Friday was really interesting. The S&P 500 then hit a clear area of demand. And as we traded into that area of demand, Fed Williams, one of the dovish speakers, was talking. And he reinforced the fact that the Fed rate is likely to, and he reinforced the fact that the Fed is still likely to cut rates in December. The market liked this and went back into a risk-on scenario, driving to the upside for the rest of Friday. Now, if we look at the Nasdaq at the exact same time, a similar thing happened. We drove to the downside out of that key area of supply, and we hit this very clean area of demand. Combined with the fundamentals, the technicals held up perfectly at both ends of the market there and provided traders with great opportunity. But the market's still undecided. Are the Fed going to cut rates on the 10th of December, or are they going to leave them unchanged? Now, there are 4 Fed speakers that are currently dovish, voting for a cut. There are 4 that are undecided. There are 2 yet to speak. One of those yet to speak is Jerome Powell, head of the Fed, and there are 2 not commenting. And there are 2 choosing not to comment. So currently, the market's trying to price in and decide whether it rallies to the upside, creates a new high, or whether we now break structure, push to the downside, and begin a long-term downtrend. Now, what else do we have for the week ahead? Well, there's a lot of news this week. We've got core PPI on the US dollar. That's also being released on Tuesday the 25th at the same time as retail sales. So we have 2 key news events there. That's also followed on Tuesday night and into the early hours of Wednesday morning by inflation data on the Australian dollar and monetary policy on the New Zealand dollar. So we could wake up in the UK to some volatility there. And if you're trading through the Asia session, be particularly careful around those instruments. Wednesday afternoon sees the autumn forecast statement for the UK. And this is what we call the budget. This can have big implications on the way the pound moves, as well as the FTSE 100. So we could see increased volatility around that statement. Alongside this, we have the usual unemployment claims and then some more US dollar data to be aware of at 1:30 GMT as well. Thursday, relatively quiet. And then Friday, we round off the week with that Canadian GDP data. But the biggest topic for the market at the moment is, what are the Fed going to do in December? Are they going to cut rates, or are they going to leave them unchanged? The market is trying to price that in now. It's very responsive to any Fed speaker at the moment. But from Saturday, we enter the period where the Fed speakers are not allowed to talk. But from Saturday, we enter the period where the Fed speakers are not allowed to influence price. So we won't be hearing from them in the lead up to the 10th of December. All good? How long was that?